It's been a fantastic discussion. I'm glad I finally got you guys on.
That was awesome, Mark. Thank you.
Is there anything that you guys would like to leave our listeners with, whether it may be real estate advice, whether it be life advice, or even just something you want to talk shit about?
I want to pick your brain, actually. Can you give me just a second?
You can have all the time you want.
All the statistics show that when America has gone into past recessions, interest rates have come down.
Yes.
I think statistically we are going to be entering a recession nationally.
I agree.
One that I don't think is going to have a lot of impact on Texas.
I agree.
But when are those interest rates going to come down?
It's a great conversation.
I've got my theory. I want to know.
And I study this as much as one can study it without being in the in crowd. And I'm talking the in crowd, the ones that pulls the levers and the strings.
Yeah.
Okay.
Uh-huh.
So I have to use basic logic. Our consumer pricing index is still through the roof. The only mechanism that is out there in order to control our CPI is rates. Mm-hmm. The rate that the Fed lends to the banks. The banks then lend out those funds to mortgage bankers, and then we lend those funds to normal consumers. Mm-hmm. Every single person in that chain has to make some money, or else they wouldn't be doing it.
Right.
I think that we started raising that lever way too slow. We raised it in the Fed. They raised it incrementally, way too slow. I think it should have been pretty quick, drastic increase in rates, and it would have shocked the hell out of people. But since we haven't, it has allowed folks to continue to spend, continue to, create this alternate world that is not reality. And they started using credit like a son of a. And in my opinion, this recession that we're going to have will be pretty hard. It's not going to be hard on Texas. Okay. I don't believe it's going to be hard on Texas or Florida's. I don't think that's political either. I just think that Texas has the most affordable housing. Florida's similar to that, unless you're talking to the beach and all that. But the idea behind how we get rates to come back down is stop spending so much damn money. And then our consumer pricing index will start dropping again. Mm-hmm. But then we also have the auto industry, where for the past 3 years, people were able to buy cars at 120, 130, 140, 150% of the actual value. You fast forward 2-3 years, well, if you got car problems, if you've got a situation to where you don't even like the car anymore, whatever reason it may be, and then you go and check what its value is, similar to homes back in the day, you go, whoa, I'm upside down in my car.
Is that because people were paying over sticker price for cars, which due to the shortage, was happening?
I was one of them. I bought a Bronco for $150,000 or 150% of its value. I didn't like it, so I went, okay, let me dump this thing. I lost 10 grand right out the gates. I think I held it for maybe 2.5 months. I just didn't like it. Yeah. Luckily, I was able to get rid of it when I did, because it would have been an even bigger loss. But you've got a lot of folks out there that have a overinflated price with a low interest rate, mind you, because they were lower. And I don't think folks took advantage of the low interest rates as much as they should have, the first-time buyers. And you also have the fact that these folks, they're not grasping the concept of what it takes to bring back.
Okay.
It just, as a whole. But
you're talking about the Fed? Is that those folks?
No, the Fed.
Or are you talking about people that bought cars at too high of a price?
Those kind of folks, the first-time home buyers. This is when the wealthy get even more wealthy. Why? Because the folks that are in a tough spot, that have a brain, they start to sell off things so they can continue. They don't want to mess up their credit. Right. And they end up having to sell it at a discount. Who ends up buying it? The people that have money. Bottom line. Right?
Sure.
So that doesn't really affect our economy because they were already wealthy. It doesn't put it back into the market. It just gives the money to the people that needed it at the time to get them to the next month and to the next month. Until we get rocked, so to speak, we're not going to see any kind of change. And if they continue to incrementally increase this, we're also not, and it's just going to make it worse. I think the Fed needs to raise the rate by damn near 0.5 point the next time they do it. And then we're going to go, whoa, okay, maybe we should stop.
Yeah.
Not stop everything, but by all means, let's slow down big time. Will it affect our real estate market? It absolutely is. It already has. But you know how you have a Band-Aid and try to keep it off
Yeah.
real slow. And it's like, this is excruciating. And then somebody wise comes across and goes, rips that sucking gun on. And you go, okay, it's done. That's what needs to happen.
So you think instead of 2 quarter points, they need to do 1/2 point?
Yeah.
Let it simmer.
Yep, I do. And it's going to hurt, but it will accomplish, or at least have a better opportunity of accomplishing what the goal is, which is to bring that sucker down.
Right.
Yeah.
Brings me back to my question that I've asked since last June. Is that about when rates started going up crazy and the market started slowing down a lot?
Oh, yeah.
Where's all the cash buyers from 2021 when 49% of Bexar County homes sold to cash buyers?
Right.
Where are they now?
They were all investors, and they're out of money.
Yeah.
They bought them all.
Okay.
They bought them all, and fortunately, it gives the opportunity to the first-time buyer to jump back in the market, kind of like you were alluding to. They just need to understand that this is a temporary situation regarding your payment.
Right.
You are able to afford the payment rate in a year, 2 years, when rates start trickling back down. You're going to have a better position.
That's what we say. Date the rate, marry the house.
Yeah, I mean, it's a great point. But a lot of folks don't understand it. Why? Because they are not willing to accept that during the last 2 to 3 years, that was totally a fake market.
Right.
We were getting free money. You should have taken advantage of it when you had it, because your $300,000 price point that you were looking at is now $220,000. Unfortunately.
Yeah.
Come to terms with it.
Monthly
Throw
payment.
your hat. Correct.
Yeah.
Throw your hat in the ring. Get in there. Build some equity, because in Texas we've been consistent, maybe 5-6% year over year, and then all of a sudden it was like 15, 20, 25%.
Yeah.
Okay, now it's coming down by 2%. Wait a minute. It went up by 2%. So we haven't really lost much of anything. But it's that whole concept of, I want to be around this area.
Yeah.
I want to be around the friends and the nightlife, or whatever the case may be. I think there needs to be more education and more people listening and understanding the why behind it, and how it can affect them 5 years instead of tomorrow.
Right.
Best time to buy a home was
Right
yesterday.
No, best time to buy a
yesterday.
home was 1978.
Yeah.
The next best
It was
time
yesterday.
is yes,
Well, we
exactly
always
right.
say best time was yesterday.
Yeah.
I mean, really.
Well, yeah.
As long, and what I always say is, you can't lose in real estate unless you sell. There was a video that I came across, and the headline was, "Don't buy a home in 2023." And I was like, look at this wahoo talking nonsense. I hit play, and he gave some good reasons as to why you shouldn't buy a home. He basically said, if you are planning to sell the home within 12 months to a year, don't do it. I agree with that wholeheartedly.
It's always been that way.
Yeah.
Fundamental rule of
Thank
real
you.
estate.
And I think we need to go back to fundamental.
Yeah. So in other words, you got you to click.
Hell yeah, he
Which
did.
is
I was
that guy's
pissed off.
goal.
I'm like, look at this guy. Who do you think he